Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the United Arab Emirates. It is the last trading day of January. We've seen Brent crude oil rise 15% through the month, giving up a little bit today, with slightly dipped below $70 a barrel, now trading down 1.5% at 69.69. That might be a message of a different type, but we'll move on. The situation as it stands at the moment, given the drama of weekends, the build-up of a major armada, as Donald Trump likes to remind us all week, that the U.S. government has sent a very, very large collection of U.S. naval vessels, as it's described. I haven't been able to count them myself, but that's what the reporting is. More than usual, because of course there is always a large collection of U.S. naval vessels not too far from the Gulf, and on this occasion a little bit more. Let's kick off this morning in faraway exotic Norway. Jamal Qureshi, Managing Director of Analysis and Strategy at Petrologistics. Jamal, your thoughts at $70 Brent, has the oil markets priced in this much flaunted U.S. Attack on Iran?
I think they've priced in the most likely scenarios, presuming there is some sort of hot conflict that emerges. If the 12-day war taught us anything last year, it's that there are limits to the amount of disruption that are, let's say, allowed by the forces that be. There are costs to these kinds of wars that were discovered. So in that sense, I would expect the base case scenario to be that disruptions would be serious but limited in scope, certainly more this time around. But nobody would want to see things go beyond much further beyond what they have. And if they do, sure, that's the outlier case where that could see things go worse.
Mukesh Sadhev, founder and CEO of Ex-Analyst, also sitting comfortably at a great distance out there in Australia. These comfortable seats there in the back row in Norway and Sydney. Mukesh, your thoughts as we see the U.S. Navy build up here and Trump again, sort of the language of maximum pressure. Does it turn into another kinetic event? What's happening from your point of view?
Thank you, Sean. Good to be here. As I called it, I call it the sticky 60s and the slippery 70s, right? So I think 70s, going into the 70s is a slippery and probably it will come down. My thoughts are that the probability of Iran disrupting the Hormuz is probably the highest. But the probability of actually happening is probably lower. And I'm basing my view on the ability of the US military to neutralize Iran's capability to block the Strait of Hormuz. So the rally was because of what Iran can do. And I think the US military presence is probably capping the rally, that the US military will be able to neutralize Iran from disrupting the Strait of Hormuz. Now, a more tougher question, which is difficult to answer, Sean, is what is the US military goals there? Will they let the Hormuz be disrupted a little bit and then they will take big action, or they will prevent it and then they will take big action? That's what I don't know. But my bias is the weekend will likely pass. US will not take a big action until they have found a solution to make the Hormuz Iran-proof.
Make the Hormuz Iran-proof. Arne Lohman Rasmussen, Chief Analyst and Head of Research at Global Risk Management. You're used to lots of ships passing you by there near the Baltics and drones flying around. So you've got some taste of our daily reality out here for decades now. But ultimately, your thoughts, this oil market at $70 Brent up 15% through the crazy month of January, gold and silver nearly doubled during that time, but oil making a surge. Is that priced in the likelihood of an attack on the U.S. on Iran?
Good morning, everybody. I think there is a lot of discussion about buy the rumor, sell the fact now. And what does that mean? It means that this is going to be a repeat of what we saw last year when they attacked the nuclear facilities. And I think, was it 2023 when we had this barrage of missiles towards Israel, where they basically called the US and saying, we're now going to set some missiles. And I think the market is buying into that narrative now that this is going to be buy the rumors of the fact. And I guess that was one of the reasons why we saw oil a bit under pressure yesterday. The tail risk is, of course, as Mukesh said, the Strait of Hormuz.
There's no fact yet, so the rumors.
No, but markets is always ahead. So now they are ahead of by the rumors of the facts, basically. But I think, but I think the tail risk is, of course, as Mukesh said, the Strait of Hormuz, and yes, the US can protect it, but they also said they could protect the Red Sea that has basically been closed for 3 years now, or whatever. If Iran comes out tomorrow or today says that we cannot guarantee the safety in the Strait of Hormuz, a lot of tankers will not be able to go through there. Insurance premium will skyrocket, and so on. They don't have to do anything. They just have to put the threat on the table. Is it physical possible? I guess the two gentlemen are probably more into that, but the threat, if they come up with that, it will have an impact and could give a spark.
I mean, yeah, go ahead.
I think that actually one thing we understand, you touched upon it. We tend to, if we are into the oil market, we tend to focus very much on oil fundamentals, oil issues. But I also have the feeling that oil is becoming, also as you mentioned, a story of this big dollar debasement going on at the moment. What is happening? Gold, silver, metals, all dollar denominated assets are moving higher. Even equities are moving higher because the dollar is losing its the trust. A lot of investors are losing trust in the dollar. And maybe what we are actually seeing at the same time of this geopolitical is that the dollar is moving into this debasement narrative, that you also start buying dollars to protect yourself. Sorry, buying oil, investing in oil to protect yourself against a weaker dollar. And if that is correct, that dollar has become the oil has become a part of this debasement story, dollar debasement story, we could actually see significantly higher oil prices this year, because it doesn't really matter what fundamentals are. Then I'm not saying it's going that way, but it is.
But it's certainly a worthy question. That I mean, gold has clearly moved out of the classical inflation hedge, or whatever different reasons one might have bought gold in the past. Silver, one would think the same. These are structural shifts. If
Chinese buying is a part of the story as well.
Of course, and Chinese buying to do all of the things from the oil point of view. Jamal, if one steps back, takes a bigger sort of 10,000-foot view here, the month of January, last day of trading, this month started with the Venezuela narrative, and in the middle we had a sort of a Greenland moment, and now we end up with an Iran moment. The idea that, is there a through line here in the big picture? If one takes an oil corridor, China was well anchored into Venezuela. China is very well anchored into Iranian oil. When you think of the bigger picture narratives on the geopol here and the sort of G2 world, do you draw any lines that one thinks about, should think about?
Yeah, and I think it's somewhat illustrated here in the Iranian potential conflict, which is that the language of it and the likely reality, if it were to break out, is much more serious. Each round becomes much more serious, right? We're talking now about the sort of regime change war that, people in Washington and Tel Aviv have been pushing for almost half a century now. And the Iranians see this. They see talk of decapitation strikes of the leadership, things like this. And now what are they saying in return? They're saying, it'll be no holds barred. We'll strike back. They've always been very measured in how they respond. Now they're talking about something more serious. And this is sort of the global geopolitical story, right? One rule at a time gets broken. One limit after another gets pushed further. Surprise limits are pushed further. I have been telling my children for a decade now, you are going to live in a world that is almost certainly going to see far more conflict and death than anybody has seen in 3/4 of a century, if not a century. We're going back to that old world. People talk about great power politics as opposed to sort of the international rules-based order. You can blame who you want to blame. I think there's deep structural issues as well as current political issues. But these are the things we have to be prepared for. Mark Carney's speech at Davos was, in many ways, at least as a point of analysis, dead on the money. You could say, if you're kind of a supporter of these changes, that this was always the way the world was, rule of the jungle. But the reality is the peace was kept for a very, very long time, at least in a macro sense, even if not every little hot conflict. So this is the dangerous world we're going into. I know gold has all sorts of factors behind it. If you take some of my more conspiratorial friends, though, they've kind of been proven right on one level in terms of picking up that gold. So that's the difficulties we have of the world we're heading into. Even if this round passes with the biggest taco of all, there's another one coming.
Mukesh, similar thoughts for you. I mean, when one thinks about the reasons the oil price is moving, after being stuck for so long in and around 65, and it dropped a few bucks ultimately and then came back, but 65 being the big anchor. How do you draw these bigger picture 10,000-foot lines? I mean, you mentioned there in your earlier comment and also in your note today from Ex-Analyst Insights, the idea of the US building up a military sufficient in the region to protect the Straits of Hormuz. Others might think they bring to a scale of ability to even block it themselves. What are your big picture views here?
Thanks, Sean. Some points I agree with Jamal, but some points I kind of disagree as well. My thought is that we are witnessing the era of peace through strength. And strength means application of force, right, which US is doing. And in that sense, peace is bullish, right? Creation of peace is bullish. So that is one way I look at it. And the US military might, intelligence is supreme, and that will produce the results like we have seen in Venezuela. The calculation can go wrong, but I am putting my bias that US military ability, intelligence ability will prevent huge disruption. And that is why I keep the oil price rally and it's slippery. The second point I would want to make, more fundamentals, is that OPEC has been extremely successful in keeping the oil price sticky in the 60s to some extent, because they are maintaining the boat in oil markets with the two pedals. What we have seen is post-2022, when they bring crude oil to the market, they cut the products. When we have seen they cut the products, they bring, cut crude, they bring products to the market. So now you have the two handles, and this handles, right now we are going to see that a lot of the Middle Eastern refineries are going to maintenance, Jazan, 55 days. So the chances of bringing crude back into the market are actually, in my view, higher. Another reason is the backwardation structure in the Brent, which OPEC watches more than probably the Dubai structure, is really good. And they want the backwardation to sustain. They want the oil well to win and not the oil tank to win. So the structure, the US military capabilities, that's what I keep in my mind when forming a view that this is capped at 70 and peace is going to be volatile and bullish.
Peace is going to be volatile and bullish. What does this mean for China? Obviously, you're sitting out there next door to China. Australia supplies lots of yummy rocks and stuff out of the ground to China. China has been benefiting a lot from very, very discounted Iranian oil for a while. Is that at stake here, do you think?
Sean, you are so spot on. I think that's where you put your hand on the pulse. It's all about China, in my view. Let's imagine a scenario where Venezuela has nothing to do with China, Iran had nothing to do with China, and they were not selling even a drop to China. My view is nothing would probably have taken place. So this is all a big China squeeze. And I watched Marco Rubio's statement. He was in the Senate, and he said that the chief challenge is China. So to some extent, Iran and Venezuela and anybody who deals with China, and now you can add Canada to the list as well. You can add any other country which tries to give advantage to China, especially the energy advantage. That is where I believe US wants to create a very high leverage. And in Trump, US president is visiting China, probably. He will only go there when he sees a deal. And this is all a build-up towards. So the biggest country which is going to lose if Hormuz really gets into trouble, Saudi and all, it's the China and it's the India. And especially, I would say now, India is kind of the next China for the US, especially after they have done the EU deal, which I believe US is really upset about. China has options because they stored maybe billion barrels. India does not have options. So to me, a lot of these things is simply because the target is India and China, and the Venezuela, Iran, others are just part of the deal.
Arne, looking, I mean, the turbulence of the last few weeks, and of course, as we mentioned, Denmark have been front and center as part of, I think it was episode 2 or 3 in the Netflix series. What's the legacy from that now? It seems nearly months ago, and it was only days ago, we were talking about the possibility of NATO fracturing and Europe and the US divorcing, the topic of Davos a week ago, and now deep in the rearview mirror. Is it indeed deep in the rearview mirror in Copenhagen, or what does it feel like a week later? Is this still an issue, having been Trump slapped? What does it feel like?
We have a joke that the foreign minister managed to put this into a working group. And we all know what a working group means in democracy. It means that you put things away and it'll take a long time before things get solved. But no, this is of course very high on the agenda. Tomorrow there's actually a march towards the US embassy in Copenhagen. People are really, really mad about that he sort of talked down the effort of the Danish soldiers, the UK soldiers in Afghanistan. There was a big losses there. So for the first time in my life, I may have a protest against the U.S. embassy. I have never thought I would be doing that. I'm a true believer in the U.S. or already support that, but now I have to go and march against the U.S. embassy in Copenhagen. So there's a deep feeling that this is a betrayal, so to speak.
Does it feel over?
No. But things have calmed down. We put it into these working groups, and maybe sometimes I use the picture. We have like waves, right? Maybe Greenland was just a wave on that, but the underlying flood is, of course, as Mukesh mentioned, that is the power of China and relatively to the US, and Trump is basically just a part of this wave. And we'll probably sort it out with Greenland. They already have access to military bases. It'll be a bit easier, and we'll sort that out. It was very unpopular in the US that they should actually take it over by power and so on. But the really flood is, of course, the standoff between the US and China. So things have come down, but there's a lot of anger. I think the same goes for the UK. There's a lot of anger about this. It seems like people say this is not fair. You cannot talk like that to allies.
Let's go to the survey question, addressing some of these points mentioned. Oil markets at $70 on Brent have priced in a US attack on Iran. That $70 is a price in. It's not a Hormuz close, you would say. Definitely, that would be maybe 170. But the idea that it's sort of priced in some kind of version of maybe what we've seen last year. Agree or disagree with this statement that $70 Brent reflects pricing that in? Jamal, in all of this series of the Trump show through the month of January, the major nightmare nearest you has sort of dropped off the immediate front pages. Russia's invasion and attacks on a continuation occupation of Ukraine and the turbulence of that. Your thoughts on its relevance for the oil markets? We're seeing the news overnight that the Carlyle Group buying the Lukoil International assets, not a done deal, still to be approved, etc. But nonetheless, the announcement of it after Gunvor were slapped away by the Trump administration 2 months ago. Your thoughts on where the Russia-Ukraine narrative is, the war itself, its ramifications for supply?
Yeah, I think we've seen as the Ukrainian position on the battlefield has weakened, right? For them, it's all about hitting economic targets further back, as well as logistics targets, and that's been huge for what's been happening on the oil markets. Obviously, the Russian refineries have been hit quite hard in waves, back and forth over time. But again, expanding to new targets. So hitting CPC was huge. The export line now that draws in Kazakhstan as well, and that was real damage. The port has 3 SPMs with one out for the long haul, and then another one attacked. They had a real decrease in production. So we're seeing more of an ability to actually impact supply and demand from the war. I suspect that, while it will come in waves, that will continue. Interesting dynamic we've had in the last few weeks as well has been that has the potential to cause pockets of tightening here and there as well. We saw a particular matchup between the CPC outage, a light, moderately sour crude, together with light, sweet Algerian crude, which was taken out by weather. Or greatly reduced by weather. So we can see these things impact more and more at the margin. But the flip side is, because of sanctions, you are seeing a little bit more stranded crude. But I also think this is a case where the fact that the US has been focusing so hard on one conflict here and then another one there's a bit of squeezing of the balloon as far as available resources. So I wouldn't be surprised in a case where, if the US is very, very focused on the Gulf, that you could have a case where Russian crude is allowed to slide into other locations because the US just can't focus on it for a while. Similar situation happened with Venezuela. The US couldn't focus on Iran because they were so tied up with dealing with Venezuela.
Literally, in the sense that their naval assets were tied up. Something like 20% of U.S. naval assets were down in the Caribbean at the peak of the drama there before the arrest of Maduro. Mukesh, looking back to basics here, a $10 oil climb through the month of January at a time in which most forecasts at the beginning of the month were Brent at 60 for the year average. But fundamentals seem to be indicating maybe a slightly tighter market, regardless of the geopolitical stress. We have reports overnight that Reuters signaling that Saudi Arabia, who obviously always publish their official selling price early in the month, and it's now the last trading day of January, so next week we'll get the Saudi pricing for the month of delivery in March. But nonetheless, the reporting is that it's going to be the 4th month in a row of Saudi cutting its OSP, which would send Arab Light, its sort of highest value premium crude, as a discount to Oman Dubai benchmark, which is obviously a heavier crude, and that would be quite an exceptional moment. Your thoughts on some of the fundamental mechanics there in the market and the outlook for that?
Thank you, Sean. I think excellent question. I think those mechanics are critical. So one mechanics I would say is, I've been saying, the OSP is not the official selling price. The OSP is the official support price. So Saudis do not want Asia, which is the number one, region which provides strength to the crude oil market these days, to feel nervous on higher OSPs and decide not to run hard, right? So I guess Saudis are providing the support so that Asia keeps running. Our idea, either Asia keeps storing or Asia keeps running. Those are the two goals. and the market stays backwardated. That's my kind of mechanics point. Now, I also want to just make a very quick comment, which is about, which was mentioned earlier about taco. I think I'm a totally not believer in taco. As I talked in previous times, I'm a
TACO as the
believer-
acronym, obviously, for those
Yeah,
on
I
the
think
Trump
US
always
is
chickens out. Yeah, that's the
No, so
acronym.
mine is a tide. Trump influence drives events, and a big tide comes, shakes the market. A small tide comes, get the job done. And I think US has been very effective at that strategy. And I'm very, in some ways, optimistic about the peace in the world, simply basing on the US military might and intelligence. So, but I build a counter view that peace will be bullish. And so even in earlier January, I was not in the camp of the six, oil prices, neither 40s, neither 80s, but kind of bit more bullish side. And these mechanics where Saudis and the Middle East will not let Asia not run hard or not store the barrels. I think this fear.
I mean, from an annual cycle point of view, going through now, we're going into delivery for March. This is starting to get into the more higher demand window.
One point I missed, there is a turnaround, and now there are big turnarounds also being announced in some of the Saudi refineries. So this may be the time that they would let their crude, if they can't process at the home, to be discounted a little bit and go out. As I say, this is my view, they do not care so much about the flat price. What they care is Brent stays in backwardation, and that gives a signal to rest of the OECD world, which goes into huge commercial incentive storages. Remove China from backwardation contango. China is a different thing. They more worry about the Brent structure. So this is the way to keep the Brent sort of backwardated and roll the backwardation sort of going forward.
Arne, looking again at the sort of end of this month, that we've seen the return, if you like, of Venezuela from the sanctioned box to the dark fleet box to now being Vitol carried and Trafigura and ExxonMobil and Chevron. It's brought, what is the world's largest, recognized at least on data, oil reservoirs back into the proper, or the sort of what is legally recognized channels, at least from the G7 point of view, etc. But where is that impacting shipping, the dark fleet? And if we saw the same with Iran, how big of an impact could that have? This trend of capturing or transforming these sanctioned jurisdictions.
If we look at the one way to look at this is actually, of course, you can also say that we're in a situation where we're moving on from a sanctioned world into a non-sanctioned world. And of course, Iran is the big picture. Could we actually move Iranian oil into non-sanctioned oil? And the big story this year could also be if we actually get a peace deal in Ukraine, moving Russian oil into the non-sanctioned world. Back to Venezuela, we see it in the high sulfur fuel oil market, in the bunker market, in the 3.5%, where suddenly high sulfur fuel oil in Rotterdam is quite cheap relatively to Singapore. There might be some demand impacts there, but it's also a story about that now the heavy sour crude oil from Venezuela and the high sulfur fuel oil is actually coming to Rotterdam. They're not going to India, going to China. They're not going to be refined there. So there's less high sulfur fuel oil, less residual oil in Singapore, much more in Rotterdam. So we're actually seeing this so-called east-west spread moving $50 higher over a few months. That's quite a significant move. So I think that's a pocket of the market where you actually see the impact from Venezuela, where the impact, I guess, on the overall oil price is probably relatively limited. We're talking about what 700,000 barrel of export not really being impacted, but the impact on the residual oil market is pretty big, and basically because you're moving it from being sanctioned to a non-sanctioned world where sort of people are active in the Western world.
Well, it certainly it could become a big defining factor of the year if indeed those different things. I mean, we have it in Venezuela. You don't need necessarily to see extra new capacity in Venezuela or Iran or Russia, for that matter, if indeed you just saw whatever capacity they do have being able to come back into the oil markets, particularly the second half of the year when the tightness is really has been forecast, that could be quite a significant impact. Anyway, we have to wrap it up there. Oil prices at 70, pricing in a U.S. attack on Iran. This room agrees with that, 2-1. Let's hope it doesn't happen this weekend, because once you push over that domino, who knows what happens. We've had news as we've been on air here. The Trump administration is preparing to unveil their new Fed chair, a gentleman by the name of Warsh, who I have to admit, Kevin Warsh is not somebody I would have known or know much about, but apparently a former Fed governor, etc., and typically has been a bit of a inflation hawk in the past. But of course, he has seen the error of his ways and is no longer an inflation hawk. Of course, he was always wrong to think that. Mukesh Sadhav out there in Australia, thank you so much for your time this afternoon there. Jamal Qureshi, thank you very much for your very early morning time in the darkness of Norway. And Arne Rasmussen, of course, also there in the Baltics in Copenhagen. Have a great weekend, everybody. And thank you for your
Sean.
time today. All the best.
Thank you.
Cheers.
Bye-bye.
Bye.